Right, so like I said, I post all my trades in my Discord server. So this is a loss that I take. So it's a loss that I took. So we've got a bullish fair value gap. We've got three consecutive candles where the first and the third don't touch, connect, or overlap. So we've got a fair value gap. And always the color of the gap is what the color of the candle in the middle is. So obviously you don't look at the middle candle to see if there's a gap there, but then once you've identified if there's a gap or not, you then look at the middle candle, see what color it is, and that's the color of the gap. In this sense, the middle candle is green, there's a gap, there's a green fair value gap, which basically means if it's green, it's bullish because price wants to go up. If it's red, it's bearish because price wants to go down. Anyway, so essentially we've got on this red candle, we've had this box here. On this candle here, you might say, oh, but there is a candle that's gone through it. True, but it has to be the body of the candle. It has to be the big red box that goes through it. So this one has not an inverse. This red candle is, because there's a big the body of the candle is inversed back below the gap. It's filled in the gap. Okay, so then on the next candle, on this red arrow, I enter. So I essentially enter here where this grey line is on the risk to reward box, and I will target down here where it says FEG. Just ignore that, doesn't mean anything. Um, Obviously it's a fair value gap below, but that's just where my TP is. That's where my take profit is. That's where I'll exit out of the trade and I will earn money. But however, I got absolutely smashed. Candle instantly went back up, displaced to massively up, and yeah, and hit my stop loss. And as you can see, that I could have risked less on this trade, but obviously there's certain every trade is different. There was different contexts. The fair value gap was small, so I could have put my stop loss only just a bit above it, like around here. But I think I had a bit more of a conviction play. I thought price was going to go down. I wanted to give myself a little bit more leeway. And like I said, the gap was pretty small, so I must have seen how big the gap was. I could have, you know, if I wanted to risk quite a lot, I would have had to put quite a lot in because the gap's small and my stop loss would be pretty small. But because the gap, like on a different gap, it could be quite bigger. It could be a bigger gap, means I would have to put my stop loss bigger. Means even though I want to risk potentially the same on this trade, I have to actually put in less. But that's another thing. So essentially, we've got a trade. I inversed. Sorry, the candle inversed. I entered. It went up. It hit my stop loss because it went through the red box, and yeah, I lost out on that trade. But at least I was targeting a one-to-one risk to reward. So yeah, that's a losing trade.